Welcome to episode 127 of the GrowCast Show. My name is Yu Hong and I'll be your host for today. So today in our studio, we have Vinolia, Real Estate Retirement Evangelist from JNA Real Estate Team. So let's get to our questions. So Vinolia, you've spent years in the corporate world dealing with complex regulatory affairs. How did that strict analytical background shape the way you look at the Singapore property market today?
Thanks, Yu Hong. Yep. So I have been in the regulatory affair industry since 2015. So that was about maybe 10 over years ago. So one thing I learned from that industry is like to never assume and to also always look for data. So because in that kind of industry, like everything needs to be substantiated, all the claims need to be substantiated, and then, all the risks need to be verified and mitigated before we move forward, right? So I apply that in my real estate now. So meaning that, for me, I always look at data, maybe URA data, demand, supply, population, even the land bid price, as also maybe break-even price. So once I have all the data, right, then I will then strictly follow the data to advise my clients. So instead of assuming, like, what a lot of people tend to do. So I was also genuinely surprised when I entered the industry. I was surprised by how emotion-driven this industry was. Like, people are still buying based on hype or, promises by the developer or even just like, feel, and all. But for me, I bring data before into transaction. So if the data makes sense, then, I will tell my client, okay, let's proceed with this. So I think the key point here is to not assume and also to represent your client as best as you can, because that's what we did in the regulatory affairs last time as well.
Your signature phrase is the $1 million property retirement plan. So let's be brutally honest. Is it possible for the average Singaporean to achieve that?
Well, it might be a marketing gimmick until you look at the data. So the thing is, it is not that Singaporeans are not earning enough money, but is where they actually park their wealth is. Like, maybe CPF earning 2.5% and then maybe cash sitting in a bank that is not giving them much yield, and maybe even property that they are living in that has appreciated but not leveraged enough. So, right, the money is there, but it is just not working for them. So if you look at property, once you leverage your CPF, maybe, your equity, the number actually makes sense. Right, so I think price is only one factor. If you leverage in CPF, equity, the math actually makes sense. So the Singaporeans already have the ingredient, but they just lack of maybe strategy and maybe believe that this can actually work for them. So think of it, right? Like a property is like your third person in your household working for you actively, without all the sick leave, all the whatever thing. Yep, and then just quietly appreciating at the background. I mean, that's the best that you can have, right? I mean,
people often call you a retirement evangelist. What does that actually mean?
I generally cannot share this news because I have seen like ordinary people with ordinary income, they are able to, achieve a very, very stable retirement because they did the one right thing, maybe like, one right property purchase. But I have also seen people, who actually work very hard and earn quite a bit of income, but, they arrive at retirement feeling anxious because nobody actually tell them what property could do in their retirement. And so I want to bring this, across to create awareness that, one simple step or maybe one understanding that property can actually help you achieve a retirement will, maybe shape your entire golden years.
What is the biggest lie our parents' generation taught us about buying property in Singapore?
One of the biggest lie would be paying off your home means you are financially set. Right? I mean, it's like, just pay finish all your loan and then, you are set for your life. I mean, that is very true for their life, where property prices is still not so expensive. Retirement was simpler, cost of living was lower, and like, having your HDB or your house being paid off is actually a financial security. But now in this kind of world where everything is very expensive, the inflation is real, and cost of living is also getting higher and higher, right? So this might not be very applicable to us already because staying in a paid-off home, it is just a frozen asset. Like the home is actually not doing anything for you, not generating any income for you, right? So our parents taught us to own a property, but never how to make the property work for us. My sincere belief is that the goal is to not just own a home, but to own a property that actually generates income and also value that, to give you choices when you eventually stop working. when the salary is no longer there. Yep. So I think that is the aim that everybody should have.
When did you realize property is actually one of the most powerful wealth building tools available to everyday Singaporeans?
I think it clicked for me the most when I see how different two identical families end up, just by maybe one property decision that they made like many, many years ago. Same income, maybe same starting point, but one family actually treated their home as just a home. But another one treated their home as an asset. And, in that 30 years, they actually made maybe 2 strategic moves, just 2, not even 10, right? So I think, and fast forward 30 years later, I could see that their net worth is actually very staggering. So if you know how to leverage your CPF in this government managed market, right? This combination is actually very rare. I think you cannot find it in a lot of places. So when you know how to use it, property can actually be the most powerful wealth building tool anybody could ever have. Yeah, the gap was staggering. The difference was actually that family that actually made 2 moves in 30 years ended up with maybe 1.5 million extra in their pocket during retirement. Yeah, just 2 moves, not even 10. Because a lot of objection that I get from my clients is, I do not want to keep moving every 4 years, right? So that's very tiring. I also understand because, a family home is a home after all. So in this context, when you look back 30 years ago, that family that actually treated the home as asset, right? They actually made 2 moves in 30 years. So that is maybe 10 years odds once. So, and just with that 2 strategic correct move, right? They actually end up with a surplus of maybe 1.5 million in their pocket for retirement.
When people hear generational wealth, they immediately picture trust funds, tycoons, crazy rich Asians. So how does a normal family actually build generational wealth?
So generational wealth, it means that, simply means not let your kids start from zero. So it means that, your property, to structure a property purchase now, such that 20 years or 30 years down the road, your property is working for you. You do not have to depend on them, and eventually you will have something to pass down to them. So to me, that is what generational wealth means. I think for common people like us, I think one correct decision that we make will, eventually lead us to having a generational wealth. So in Singapore, right, a family who upgrades strategically or at the right time, eventually they will have an asset that appreciate, and I think that's already a generational wealth. And that's completely available here. Most families just need a plan.
If someone is listening to this in their late 30s or early 40s, and they've never really thought about property as a retirement tool, are they too late?
Well, they are not. And I want to say that with certainty and clarity. It's because the fear of being too late is what's keeping people from, being stuck for the next few years. In fact, if you're in your 30s or 40s, it is actually the sweet spot, the best spot, because, that's where your income is at the highest. Your CPF has been quietly building. And you still have 20 odd years, of compounding left. And I think the most importantly is you still have the maximum loan tenure that you can ever get. But every year, moving forward, every year of waiting will cost you though. Like for example, a property bought at maybe 38, have 7 more run years than a property bought at 45. And those 7 years are actually money, right? Money that is being generated, that you are missing out if you keep waiting. So actually, no, you're not too late. The best time to start is actually now, not next year, not when the property market dips, or not when you feel the most ready, right? Because the decision that you make now will shape how you live in maybe when you retire in 65.
How come many people in Singapore don't know how to retire with property?
I think primarily because we were never taught how to do it. When we were young in school, we were taught to, work hard. To study hard, to work hard, to get a decent job and, to buy a property and pay it off, right? But nobody taught us how to think what can this property do for the next 15 years of my life? And the property industry hasn't helped either. Agents are trained to close deals, to just, help purchase. And then after that, they move on to the next clients. So the clients also do not know what to do with the property next, right? So I think that's also another common thing that I see. And also the saddest part is, most people realize this only when they're in the 50s. I think that by then the window for the best action has already, been wasted, already passed. So actually property is one of the asset that most Singaporean own that can replace their salary in retirement. They were just never shown how.
So some people are anti-investment property, meaning they say it's exploitive or it's too risky. So how do you respond to them?
Well, I respect that, and I also like to challenge the framing. So I do not agree that it's exploitative because, like, for example, landlord, right? They provide housing for people who might be in transition, who are not ready to buy, expats who are just here for a couple of months. So that is like a service. And yes, I do agree that all investment carry risk, but in my opinion, like, property investment in Singapore, in this kind of very well managed market by the government, is actually one of the lowest risks that you can have. And in fact, inaction is one of the biggest risks than, investment. Because when you do nothing, you let your CPF sit there, you let your money sit there, it's just being eaten away by inflation. So doing nothing with your money is a choice that is getting more and more expensive to make each year moving forward.
So everyone talks about asset progression and upgrading to a condo. So what do you think is the number one biggest mistake people make when it comes to them finally upgrading?
The number one biggest mistake will be maybe buying from emotion instead of from data. So those HDB owners finally, when they upgrade, they realize that, they have worked so hard to get here. They have cashed out their equity. It's time to move on to the next stage, right? Maybe a condo or private property or so on. So maybe they are very emotional. So they will just buy something that they like, maybe to think that they want to stay there forever. Or maybe they'll look at their peers to see, what are the purchases and maybe try to match them, right? So without looking into their current situation, their long-term goal, as well as maybe their existing liabilities and maybe all those things. So they might end up in a position whereby they might be overstretched in their mortgage. And when that happens, they might feel stuck with nowhere else to turn to. But somebody who actually looked at data before their purchase and who planned before their purchase will ask, where is my exit strategy? What can this property do for me for the next 20 to 30 years of my life? Does it maybe match what I want to do in 30 years? Yeah. So I think that is the biggest mistake, to buy just from emotion instead of data.
Is the idea of finding a forever home actually a bad concept?
Forever home is not a bad concept. It is just an expensive one if you don't know what it costs you. A forever home freezes you in a market that rewards movement, because Singapore property market is built through strategic progression. So a person who stay in the same property for 30 years still make money lah. Doesn't mean that the property does not increase, but it increases at maybe a line. However, a person who make a few moves throughout the years, is able to compound their wealth significantly through multiple assets lah. So it is okay to love where you stay, and it's okay to stay long term at a place, but just know your numbers, know what your property could be doing for you instead. So even though if your choice is to stay, it is a conscious choice instead of maybe just staying by default.
A lot of buyers now are actually sitting on the sidelines waiting for property prices to drop. So is that a good strategy or a bad strategy?
If you are going to wait for a crash in Singapore, you might be waiting for a very, very long time. Singapore property does not behave like other market, and Singapore government, right, actually actively manages the land and the market just because, the land is scarce here. So this problem will never go away. The condition for maybe a market collapse in Singapore is actually, it doesn't exist here lah. And also, right, for a property to crash, there must first be a bubble, right? And if you look at the bubble index, Singapore property is actually very fair valued. It's not even overvalued or not even near the bubble risk. So property crash is going to be, I'm not saying that it will not happen for sure, but the chances of it happening is going to be very slim. So now, does that mean that you can just buy blindly? No, I wouldn't say so, because the right property, the right location, or even the right entry price that suits your need, your budget, and your current situation is still the most important. It matters a lot. So what the real question is whether should I wait for the price to drop? It is, am I making the right decision for my situation, right? Because I would like to say, right, time in the market is always better than timing the market. The best time to buy property is always 10 years ago, but the second best time is always now.
How should a modern dual income couple leverage their position in today's property market?
A dual income couple actually is at the strongest position, in my understanding, in today's market, because dual income means, higher income, which means higher borrowing power. stronger cash flow, and also higher ability to withstand mortgage risks and stress without panic, right? So the first thing I would do is to have a conversation with them. Maybe talking about decoupling to see how, one party holds the home and the other party will become a single buyer again, so that the other party can proceed to buy maybe an investment property with no or very low ABSD. So that means, you move from owning one asset to having two assets, one to live in and one to generate income. And secondly, I will also ask the dual income couple, what does retirement look like for you? Have you actually counted the numbers? How much do you need every month to live comfortably after you retire? What does that figure look like in 25 years or 30 years when you retire? And the most importantly is, can your property help you bridge that gap? Like from now till the retirement, the gap that you need.
If I ask a typical real estate agent, if right now is a good time to buy, they almost always say, of course it's now. So what would you say?
Well, I can understand where they're coming from, and I actually do agree that the right time to buy is now. I mean, partly it's because, for property agents, their commission depends on the transaction, right? But for me, I would actually say depends, because your financial future depends on this, right? So let's think about it. The question is now a good time to buy might not be a good question to ask. You should ask, is now a good time to buy for you based on your income, your CPF, your existing liabilities, and also your timeline and your goals. So then the answer looks very different for every single person, right? And so if you ask me right now, is now a good time to buy? I would say, let's look at your entire picture. And once we see your entire picture, and then I will then advise you whether it's now the right time to buy. And if it's, and I will also back up with data. But after looking through your entire picture and now might not be the right time for you, and then I'll also share with you, how can we work towards the next right time to buy.
You work with a lot of professionals who have great corporate work. So why do they need a property retirement plan if they already have a great salary?
High income professionals are often most vulnerable in their retirement, not because they never earn enough, but because, the current position never let them think strategically. And also when you have a high income, you also naturally tend to have a great lifestyle, right? And with great lifestyle, you will have more expenditure, like, your luxurious holidays, your private tuition costs, and yada, yada. And all those things are funded by salary. So once the salary is gone, then you do not have anything else to fund this. So that's where the property retirement plan come in. So it will help you fund your lifestyle even though you stop working. So a property retirement plan give you great life when your salary is gone. So a property retirement plans generates income whether you're working or not. So by having this plan, it means that you are set even though eventually you stop working and your salary is no longer there.
There is a psychological side to property investment that nobody really talks about. So what's that inner work that clients need to do for themselves?
That's where most deals break through. Not in the numbers, but actually in the people's mind. Like the biggest psychological barrier is the fear of getting it all wrong. And this fear of getting all wrong, right, it freezes people, and leads people to inaction. There's also a comparison, people will look at their peers and see what they are buying and try to match it. And thirdly is a sunken cost mentality whereby, maybe, I like, there's too much attachment to the house and the emotion, so we'll just continue to stay there. So the inner work here is to learn to separate your emotion from your asset. Your property can still be a home that you live in, but it doesn't have to be a liability. It can also be a financial instrument that works hard for you and maybe provides for you when you retire eventually.
What's a common thing that clients wish they knew before they started their own property journey?
I think I hear a lot of saying that, I wish I started earlier and I wished I worried less. So the three things I hear most commonly is, I wish I knew my HDB is an asset, not just a home. So most people actually sit on the appreciating asset without doing anything about it, without leveraging it, to earn more income. And secondly is, I wish I knew how much I could borrow. So knowing how much you could borrow actually helps them think bigger and think what's more possible. Because a lot of time, I hear a lot of them say, I don't think I can afford a 2.5 million condo because I don't think I can borrow that much. But, I think that's just based on emotion and fear. But, when I sit them down and look through the numbers and do the numbers for them, they might be surprised, if they are able to cash out their equity from the HDB, they're actually able, coupled with their income, they're actually able to maybe afford that range of a property. So that's the second one. So the third one will be, I wish somebody had shown me this full picture earlier. Not just like, how much money I could borrow, but also like, what could the next 20 years be if I choose to go ahead with this step. So I think having all these three, then I think it empowers everybody to be able to make that move sooner instead of just being stuck with their fear of maybe making the right move and then end up not doing anything for the next few years.
The Singapore property market feels incredibly high pressured right now with cooling measures and high prices. So how do you keep your clients from making panic decisions?
So I will bring them back to their plan, like, the why. Like, why are they buying this now? And also, what can the property do for your future? Because having these two certainty, like, the market noise no longer drive their decision. Because if you see a lot of time, people who keep waiting and waiting for the right time will still be waiting 3 to 5 years down the road, right? So I think knowing your why is very important and knowing the end goal, right? What is your retirement goal? How much money do you need eventually to live comfortably without depending on your children? And how do we get there from now to there? I mean, investment can be one way, invest in stock, but what if I can tell you that, I can also use property to bridge the gap that you need for retirement. So having this, having understood this clearly will also, help them to not be so stuck.
What is the biggest blind spot for couples in their 40s who think they are totally financially secure because their home is fully paid off?
So a fully paid off home can feel financially free, like, no more stress, no more mortgage. But, it's actually a blind spot because you're actually sitting on a frozen asset, right? And the asset that you're sitting on, might not be leveraged more and it's not giving you any more active income. So, you cannot live off your property. You cannot buy groceries on your property, right? So it's just an expensive place to sleep. Do you agree? So the real question isn't whether your home is being paid off, but whether the assets that you own right now can fund the next 30 years of your life at 65. Because eventually when you reach 65, right, I mean, we want a choice whether do we need to work or do we have a choice whether we want to work or not, where we want to travel and what we want to eat, right? So if your home can fund the next 30 years of your life, then I think you're all set. And that's the freedom that, everybody would like to have.
What is the profile of the clients that you currently work with to build their $1 million property retirement plan? And how exactly do you help them?
So my sweet spot is actually Singaporeans who are asset rich but strategy poor. Maybe people in their 30s or 40s, who have completed their HDB, MOP or condo SSD, have cash lying around and also CPF accumulating. So these are just all sitting down there and not doing anything for them. So they have the foundation already, but they are just lacking the blueprint. So I will also start with my conversation with them to ask them, like, where they are now, what does retirement look like for them, and what is the timeline that we need to get there, right? So having all that in mind, then I will start to build a property roadmap for them. So it might look like maybe cashing out from the HDB for some, to maybe purchase into a private property, and maybe for some it might be decoupling to get another property for passive income, and even maybe to buy another unit that is an investment grade property so that they can bank on the capital appreciation. It might look very different for everybody. It is not a standard set of like a property map, right? But eventually the outcome or the destination is the same. Is to help them bridge the gap that they need to reach the retirement, the numbers that they need. Yeah. And that is the $1 million retirement plan in practice.
That's all the questions we have for episode 127. Stay tuned for episode 128.